Morning everyone and welcome to today's morning markets. My name is Chris Leyland, I'm Director of Investment Strategy here at True Potential, and what I want to do today is really just let you into some of the discussions that we're having as an investment team overall. So if we look at asset price movement, and we start with Friday. So the US finished up on the day with the more technology-focused NASDAQ index leading the way up 0.9%. The S&P finished just behind, so the S&P 500 up 0.7%, and actually this index closed at a record high. The key data release from Friday was the US jobs report, and that showed that US employers have hired 266,000 new workers over the month. And that's according to the Labour Department's monthly non-farm payrolls report. Now that's well below the level of at least 1 million jobs that was expected. Now one thing we've discussed a lot on these calls is the recovery of the jobs market in the US. And you're probably wondering actually why US equities finished up on actually what was weak data. The reason is that investors are nervous that if economic data continues to improve, then at some point, the US central bank, so the Federal Reserve, will have to raise interest rates. So this lower than expected jobs report will likely give the Fed more confidence in its wait and see approach overall. Technology companies particularly benefit from lower interest rates, therefore that's why they provided some of the best returns. If we look at the chart here, you can see the reaction in the bond market, with bonds rallying, with the yield on 10-year treasuries falling to below 1.54%, although later changed direction, finishing up on Friday at 1.58%, and this morning coming in at just under 1.6%. If we move over to the UK, the FTSE continued its ascent, finishing up at 7,130, so up just under 0.8% on the day. Europe was also strong, with the Euro stocks 50 finishing up 0.9%. Looking at currency, so looking at the pair sterling US dollar, it's moved up now through the 140 level, and that's buoyed by a weakening US dollar following the employment numbers that I discussed earlier. If we look ahead over the week, we have the ECB minutes from the April monetary policy meeting on Friday. This will give further clues around how the ECB are viewing the overall recovery in Europe. On Wednesday, the UK Q1 GDP preliminary estimates are published, with the likelihood that the slowdown is much less than the -4% forecast by the Bank of England originally in February. The monthly figure for March is now expected to show an expansion of +1.3%, illustrating the recovery on track. And finally, the US CPI data will be published on Wednesday. So on an annualized basis, US CPI has gone from 1.4% in January to 2.6% in March, with much of this due to the base effect of the sharp price declines due to lockdown a year ago. Investors are looking at this data to try and understand whether this will be transitory or if surging commodity prices offer a sign of higher inflation over the long term. I hope you enjoyed listening today, and I very much look forward to speaking to you soon. Thank you very much.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.